But it's really all about the big credit debate right now. Should the RBI directly lend to credit-starved sectors? The US Fed has applied direct stimulus. Should that be the RBI strategy? What really could be the future of banking, and what really, how rather, could we really strive through the COVID times? Who better than Sunil Mehta, the Chief Executive at IBA, joining us in the show right now himself. Sunil, hi, good morning. Good to have you on the show, and hope you, your employees and your family are all keeping safe.
Yes, thank you. And yes, of course, we all are observing the social distancing and keeping the required measures to keep ourselves safe for the time being.
Yes, we all are working from home for over a month now. But Sunil, the big debate, like I was earlier highlighting, where does the buck really stop? When does RBI stop relying on the banks and figure out a direct injection mechanism? Because that really seems to be much the need of the hour. In fact, I would say we're a little late in the day.
I don't think it is the job of a regulator or the central bank to directly come and start lending in this sector, because it's the banking sector which has got the expertise and the relationships with the individual customers, individual enterprise. But one thing I can tell you that it's not only the requirement and the problems with the banking sector, it's an overall problem with the economy. You know, the lockdown for the 2 months, you don't find any new economic activity coming up. Even the existing economic activity was standstill. So bankers also need a proper ground to lend, because bankers are basically custodian of public money. They have developed their own risk models, they have developed their systems based on which they have to lend to the entire economy. Because they are custodian of the public money, they have to lend it prudently so that the money is recovered and can be recycled into the economy. So one of the problems which the bankers are facing right now is those companies which are already into the production, they are not planning for any expansion or coming out with the new economic activities. The another problem happening is that even in MSME sector, it is yet to come back on the production. However, to take care of their emergent needs, all the banking sector has come out with a special credit line for COVID-19. Now, 10% of the working capital has already been sanctioned as a credit line by most of the bankers, and that is now being availed by the entities. Problem with the entities also that to avail these lines, they have to comply with certain requirements. They have to go and start the operation. Now the government has started releasing some of the activities, like road sector has been released. 50% offices in some of the states have started functioning. So now the economic activity will pick up and the bankers will also lend. It's not that bankers will not lend when the demand is there in the market.
Couple of follow-ups for you. Are you saying that it's actually the government's job to come in and step out with an economic bailout, and then thereby, to your point, that the overall economy and overall sectors really seem to be pumped and fueled with some sort of stimulus? A, that. And, B, ultimately, if this tranche of COVID loans does go bad, as we've seen bank after bank report that a large part of their book is opted for moratorium, and this will lead to higher provisioning in the coming quarters as well. Large corporate banks as well reported the same. It's RBI money that the banks are lending out, sir. So why doesn't RBI step in and actually arrest the situation?
You can very well appreciate that the central bank do not deal directly with the customers. They do not have direct access to the customer. The customers do not have a branch. They don't have branches to be operated in the so they can only operate through the banks, and that is what they are doing. They are providing, the regulator is providing liquidity to the banking system through various means, through LTRO. They are making the liquidity available, and sufficient liquidity has already been available. Now, to get a proper lending, all the enterprises which are facing these challenges, some of them have already started availing the facilities under COVID. Some of them have yet to avail. So the moment they start availing all those facilities and come out with their plans to restoration of their business, that will definitely, there is some lag between it, and that is going to happen after some time, the moment the economic activity picks up and the moment of the people become a little more easier and the faster. Now, the second aspect of it, the government stimulus. Yes, of course. that is the need of the hour, because you know pretty well that bankers are also facing a very difficult situation right now. Whatever incremental lending they are making to the existing enterprises, that is basically not based on the existing great lending potentials. Like there is no increase in sales. It is not basically increase in capacities. It is basically to meet out the expenses which all these corporates and the entities will incur during the lockdown time, because all of them have got some fixed costs. Their receivables may get delayed. So it's basically this is a lending not to if I increase business activity, but to sustain the business activity during this lockdown period. So this particular type of lending is definitely a risky lending, because this lending will definitely go forward and will have to be recovered from the operations in future. That's why the banks are given a time window of 36 months to 48 months for recovery of these COVID-10 loans, because they know that this cannot be recovered in a very short term. Now that is a one part just to sustain the lockdown period. But going forward, the entire business and economy is going to go a major changes. The major changes will be, there will be a different models of working. People will be doing more of the delivery models. The people will be changing their more of the technology-based models. So all this transformation will also require some investment. And to make those investments, they will have to come out with a plan, development of technologies, and the bankers will definitely be in a position to lend. So right now, it's not only a matter of a supply side, it's a problem of demand side also. Because demand side will only come up when the production really is back on the rail. Now the government, yes, as an IBA, we have already put in request to the government that especially for the smaller and the middle segment, which are almost on the threshold level, and those who do not have very strong sustainable capacity. So if the bankers lend to them for this difficult type of financing, which cannot be linked to the increase in production, which cannot be linked to the increase in sales, which is directly linked to the losses which the units are sustaining during the lockdown period. So that is for that type of lending, tomorrow the system should not say that the bankers have not done the due diligence. So if they get certain guarantee covers from the government in the form of CGTMSE, in the form of a credit guarantee trust, for which we have already submitted our suggestions to the government of India, then that will be an enabler in faster turnaround of these units into the smaller and middle segment areas. So I think it's a overall ecosystem that has to work. It's not only that bankers can lend even when there is no demand. You can't distribute money unless and until there are genuine credit seekers having a good track record and the capacities to absorb the credit.
I completely get your point, Sunil, because this is almost turning out to be a bit of a catch-22 situation. While there's no denying that there is that NPA stress which runs hard in the system, COVID, but pre-COVID one has seen, or even right now, that there are a large cluster of banks or NBFCs for that matter, which have the liquidity, but they don't want to lend. And I guess, the point being, why should banks be taking the risk? If I'm a prudent bank with a carefully and well-balanced, built balance sheet, then why should I lend and spoil my books?
No, I don't think that is the case. I'll tell you two different things. One thing is
definitely banking system has got some predetermined systems and processes for lending, because the banking is an intermediary. They are the custodians of the public money, so they have to lend in such a way so that the money is recovered back and can be recycled, the interest on their deposits can be paid, their expenses can be met, and they are able to support the economy. So somewhere the emergency type of funding in the present set of circumstances, this is not a normal lending which is asked. It is a type of lending which we have to take a risky lending, a lending for a segment where you are lending not because the growth has taken place, not because the production has gone up, not because the sales have gone up, just because this business was stand still and you have to fund sometimes the losses, you have to sometimes the fixed costs which was not recovered from the operation. So to encourage the bankers
to support these type of ecosystem, entire the system, there needs some enablers from the government. If the government comes out with certain guarantee schemes, maybe what the type we have requested is for MSME, suppose for 25 crores of the businesses, if they come out with a 100% guarantee scheme, only for the incremental lending and only for those type of the accounts which are having a standard and a good track record to 31st December 2019, then definitely this can become a very big starter. Because this can definitely encourage the banker that although you are making a risking lending, but it is supported by a guarantee, the default proportion may not be 15 or 20% more than that. So just by putting out a guarantee for 10,000 crore, you can make a lending of more than 1 lakh crore. And that's the way this can have a multiplier effect and a propelling of the economy. And another way is the government has already taken a decision for going for the road projects as well as for the projects which are run. So once the infrastructure starts, automatically the demand for steel, demand for cement, that will start. And the moment they start and the production operation comes in, the working capital demands will also come in. So it's a both-way process. Like you have to generate for demand of a quality credit, you have to provide an enabling mechanism for the credit, and this banker, it's not that they have been lending so far and they are into the business of lending. So it's not the risk aversion, it is basically the support from the ecosystem that is the need of the hour.
Okay. Do you think an RBI guarantee on all loans passed on by banks during this period needs to be put in place in order to bring banks out of this entire frozen surplus liquidity mode?
This is one of the enablers. This is not the only thing because, the government has already been guaranteeing the certain type of activities like the CGTME trust was created for MSME up to 2 crore funding where they don't have any collateral securities. But that particular scheme is meant only for a particular segment and that segment is a very small segment. But if that guarantee scheme comes out for a larger segment, which are all existing borrower, maybe with collateral, without collateral, having certain turnover and satisfactory record, and bankers are also lending them for meeting out their cost and their losses, then definitely this will be one of a major enabler. The another important enabler is like the moment we come out with certain packages for industry-specific packages because some of the industries, some of the businesses will definitely require a greater intervention. For example, hospitality sector, travel and tourism. Even if post-lockdown, I do not foresee that they are going to come out very quickly. It will take time because the fear has gone into the minds of the people and it will gradually unlock. So maybe first it will be 10, 20, 30, 40% capacity utilization. So these sectors may require long-term packages also in terms of certain supports. And I hope the government is already working on it and will be announced by our government. And that will be one of the enabler. IBA has already come out with certain relaxations. They have already provided the moratorium for the existing lending. So that will provide the sustenance to the existing businesses during this lockdown period. And bankers are now sufficient liquidity has been made available to them. It is just a starting of an engine. The moment the engine is started, the economy bounce back. I hope all this scenario will definitely improve.
Okay. All right. Thank you for that, Sunil, and for joining us this morning.